Welcome to the channel, guys. My name is Jess. So after a rapid drop last night, Bitcoin has retested $53,000 and the range low of our macro descending structure. The high time frame charts are starting to print some warning signs, with a drop below the 3-day Gaussian channel historically threatening the start of a bear market, and weekly momentum dropping below lows seen in October 2023. So let's dive into the charts today to talk about what this recent drop means and analyze the potential for a bearish continuation or possible reversal. Before we get into all that though, make sure you guys smash that like button and subscribe to the channel to get regular Bitcoin analysis every Monday, Wednesday, and Saturday. If you're after even more content, be sure to check out my free Telegram for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. So moving into the recent crash, Bitcoin had been in a downtrend for quite a period of time. We had a short time frame descending channel structure over here, but moving into Friday particularly, and NFP data and economic news coming out on Friday, we saw a bit of a sell-off here, dropping us below our short time frame descending structure and seeing a daily, flash downwards, or a daily move of about 6.4%. And that took Bitcoin to retrace the range low of our macro descending structure over here. So the very low of that drop took us all the way down to 52,500, with the daily candle close just a couple of hours ago sitting at around 53,900. So as you guys can imagine, we saw a massive spike in liquidations in the last 24 hours, which are up 200%, with long liquidations up about $221 million. And it wasn't just the crypto market that dropped. We saw a pretty steep drop in S&P 500 as well, about a daily candle there of about 1.74%. So I think the cause of this is pretty obvious. It's the high amount of economic news that we have moving into September. We have interest rate decision coming on the 18th, and the entire market basically hinging on the 25 to 50 basis point rate cut that we are expecting later on in this month. So we had NFP data coming out last night, and so for those of you guys who don't know, NFP is non-farm payrolls and is essentially about the job market. So the job market is important and is a leading indicator for inflation, because the strength of the job market heavily, impacts the rates that we might be getting, right? If we're seeing a very, very poor job market, then it is more likely that the cost of debt should become cheaper to try and boost the economy up and improve that job market, as opposed to a heavily increasing job market. We might be seeing a massive rise in inflation. So that's a very, very basic explanation of how that works. Non-farm payrolls came out just a little bit lower than consensus at $160,000. The actual results were $142,000. And so that's actually quite positive in terms of getting rate cuts. So we're seeing, a little bit of a positive shift in the job market, a growth from $89,000, but not so much that we should not be expecting any sort of rate cuts coming in September, and not so little growth that there is, really large concern about a collapsing job market or anything like that. So overall data came out all right. We do have a lot more data coming out next week. We've got CPI, PPI, and as I said, that interest rate decision coming out on the 18th as well. So let's go ahead and dive into our macro charts, guys, and talk about the potential for a continuation here to the downside, and the potential warning signs we have printing on those higher time frame charts, what they mean, and the potential for a reversal, and what we need to see for the buyers to regain strength. Before we get into any more analysis, guys, let's share a quick word from our sponsor Bitunix, where you can get 15% off all of your trading fees and up to $5,500 in sign-up rewards by creating your free account using the link down in my description box. Bitunix is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio, or by using the code 1GG3 when you create your account. Starting off with the 3-day charts, we're going to pull up the Gaussian channel, and if you guys have watched a couple of my videos, you would know exactly what I'm about to talk about. So historically, the Gaussian channel on a 3-day time frame has been really great at telling us whether or not, or confirming to us when we are about to enter an extensive period of bullish price action, also known as a bull market, or exiting that, enter a period of extensive bearish price action, and also known as a bear market. So breaking above the Gaussian channel generally marks the start of that uptrend, and while we're above the Gaussian channel or within the Gaussian channel, typically we continue to remain within, technically speaking, an uptrend, and falling below the Gaussian channel and specifically rejecting off the midline as well, we tend to enter a period of extensive bearish price action. We've seen that time and time again in the past, and it is that midline rejection within, you know, that bearish continuation that really locks in that continued, you know, downwards price action. We've seen it in most of our bear markets in the past, at least one midline rejection. So if we take a look at our current segment of price action, we can see that in our most recent range low retest here of that macro structure, we are falling below the Gaussian channel. So there is still about 2 days left before the actual close on the 3-day charts. But if we do get that close, it becomes potentially that first warning sign of an extensive period of bearish price action. Now, as I've talked about in my last videos, there is nuance to this analysis. Obviously, no one's ever going to use one technical indicator to base all of that. I mean, you might, but I don't recommend using one technical indicator or one horizontal level or anything, really, just one specific thing to make up your decision about whether or not you're going to, I guess, participate bullishly or bearishly within a market, right? There is context to the situation, and that context that I'm speaking about is specifically the horizontal levels of support that we have down here, being 52,500 or, you know, 52,300 to $51,000. Also the horizontal bearish trigger point here at 49,000, and most importantly, our structural support and our directional support here within this macro descending channel. So while we're within the channel, while we have a technical indicator that tells us that we have a warning sign for a bearish continuation, until we break out of our structural pattern and invalidate the horizontal supports that we have at these lows, we cannot with confidence say that we're going to enter a bear market. It would be, you know, I don't know what an analogy for that would be, but it would not be a very good way to make decisions. So moving past the Gaussian channel, however, we do have one more piece of information that is, again, giving us a warning sign, an early warning sign that we might be seeing that it's an extensive bearish period, and that is on the weekly time frame. So if we move over onto the weekly chart and pull up the RSI, we can see that momentum from this most recent drop here has fallen below the prior lows that we saw all the way back here in October 2023, which, if you guys recall, was the start of the bull market, right? That is when Bitcoin started to aggressively rally, and we shot right up to $73,000 within quite a short period of time, you know, in relativity to the prior bullish price action, right? So that's when we can kind of say we entered the bull market. We had a very aggressive uptrend from this point on forwards, but we can see that again from that most recent drop, we've fallen below that same level represented here on the RSI. So that's telling us that on the macro charts, we have seen a prolonged period of consolidation that has led to such a large shift in momentum and a decrease in buying pressure and increase in selling pressure that it acts as an early warning sign to a potential high time frame bearish continuation. Now, just the same as the Gaussian channel, we can't use this one indicator to make all our decisions moving forward, right? For example, if Bitcoin was in a, let's say Bitcoin was traveling in a downtrend, right? And we had the same corresponding downtrend on the RSI. We had a breakout here on the RSI, but the price action had not done that yet. It would be probably not the wisest decision to use RSI alone to, you know, take a long here on Bitcoin, because that is when we have a high risk of a fake out, and that's not particularly a successful, you know, position, right? Or it could just be a tiny little dip above before faking it back down into the downtrend. But for example, what we can use RSI for moving forward now is if Bitcoin does break below these horizontal levels and break below our key macro structure here, we have leading RSI or momentum confirmation that we are entering that bear market. It gives us extra confidence moving forward into that, you know, period of downwards price action, that it might be an extended period. Conversely, if Bitcoin manages to, in the next 2-day period, recover and bounce slightly, and we see that RSI move back upwards before that, you know, weekly candle close, that, you know, this range low retest has a high probability of, you know, bouncing and recovering because we have not seen it drop below those prior 2023 levels. So it's pretty clear from the upcoming weekly candle and 3-day candle close that the next 48 hours of price action for Bitcoin are very, very crucial. So let's go ahead and elaborate on what we mean by these structural and horizontal levels of support that we have here, that, I guess, mark levels where buyers can defend the price action from further bearish continuation. First of all, by taking a look at the Ichimoku cloud on the weekly time frame, because it has great confluence with those exact levels that I'm talking about. So if we take a look at Ichimoku on the weekly time frame, a very similar sort of indicator to Gaussian channel in the way that it provides us with confirmation of a latent bear market or a bull run, right? So I spoke about it in my last video, but essentially breaking above the leading span B, or the base of the cloud there with the baseline crossing over as well, serves as an indicator or confirmation for the start of the bull run, and conversely falling below the leading span B, which acts as a very strong level of support, as well as the baseline crossing below latently, we have confirmation of the entrance of a bear market or an extended period of bearish price action. So what we can see here from our structure and from the Ichimoku cloud is that in terms of entering that actual bear market, we need to see Bitcoin fall below sell side liquidity for that prior low retest, that being all the way down here at $49,000, right? So that would be a much steeper drop, and we would see a breakdown of our structure and bearish continuation in falling below the end of that liquidity zone on a daily time frame. And that also coincides very perfectly with that leading span B, right? That red line at the bottom there of the Ichimoku cloud. So that tells us, again, confirmation that we are entering that high time frame bearish continuation. But until we see that, while we are above the cloud here, or that leading span A, and above the macro structure, Bitcoin should be expecting a bullish continuation. Moving over onto the daily chart, we can see that in its most recent daily candle close, Bitcoin was able to stay above the base of this liquidity zone here, or change of character level, created by the prior range low retest. So not the most recent one, but the one before that, where I spoke about in my last video, if we got a daily candle close below it, we are very likely to then move into fill the rest of this volume gap here, which is exactly what Bitcoin did, dropping below the structure very slightly, but the close itself showed that the buyers were able to successfully defend the base of that structure there, as well as horizontal support at $52.5 thousand and the base of that liquidity zone there, all representing horizontal levels or structural levels of support. So the close there being above the base of that zone is actually a very, very good sign, and suggests that Bitcoin is holding at support as of right now. So at support, we should be able to facilitate a bullish reversal here. Alternatively though, if Bitcoin did end up actually dropping below the base of that liquidity zone at 53,500 and get a daily candle close within the next zone over here marked by the prior range low retest, then we have a much higher likelihood then of getting a full move into this next level of high time frame support at $52.5 thousand to $51,000, and falling below that, testing sell side liquidity. Now it is at this test of sell side liquidity that those indicators about falling momentum on the RSI and that Gaussian channel start to become a little bit more critical, because it increases our likelihood of seeing a move below this level. But until we see that, Bitcoin should be expecting that recovery. So that is everything I have to say on the macro charts all wrapped up, guys. So yes, we are printing some warning signs on those higher time frame charts on the 3-day Gaussian channel and the weekly time frame, but we still have to wait for the weekly and 3-day candle close to confirm those shifts. And again, the most important thing that we have to keep in mind is the context of that price action. Are we seeing weakening momentum, and are we falling below the Gaussian channel because of an extended period of consolidation, or because we're about to see a sharp drop, right? We have to take that within the context. And so that is the structure of the pattern. Until we break the structure and the corresponding horizontal levels of support, specifically the sell side liquidity breaking below that, we are technically still within somewhat of a bullish structure, and the recent crash shouldn't be too much of a macro bearish concern. So that takes us into the short time frame price action. We know that Bitcoin is at support here on the daily chart. Let's go ahead and take a look at what a bullish continuation would look like on a short time frame, and what Bitcoin needs to do in the immediate, sort of period to sustain above this structural level of support here. So moving over onto the hourly chart, we can see that so far Bitcoin has recovered quite well from the crash downwards. It formed a bullish engulfing candle pretty much straight away on the hourly chart, and so far looks to be in somewhat of a bullish trajectory. So in order to continue that bullish trajectory, the first level of resistance we need to clear is right here at $54,000 to $54.4 thousand. We can see Bitcoin is approaching it right now and has had just about that one rejection from there. But in order to, I guess, break down, and if we are going to see that bearish continuation, what's going to immediately happen on the short time frame charts is a break below this range low. So even if Bitcoin continues to chop sideways within this range, that's relatively neutral behavior. If we end up forming these higher highs against this level of horizontal resistance, that would be a great sign, right? Because we are increasing in buying strength as we move against this level of resistance. And alternatively, breaking below the range low suggests a potential for immediate bearish continuation if we're unable to sustain the price action above this level over here. Alrighty guys, that is all the analysis that I have for you today. If you enjoyed the video or you learned something, don't forget to smash that like button and subscribe to the channel. If you're after even more content, be sure to check out my free Telegram for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. And if you are a trader, don't forget to get 15% off all of your trading fees by signing up down below to Bitunix. I hope you guys have a great week, and I'll catch you in the next one. Bye!